Folks, thanks for joining us today. My name's John Dubas with Premier Marketing, and we'll be spending the next hour or so, 45 minutes or so, discussing something that's kind of on the forefront of a lot of agents' minds right now, and that's how to finish up strong during this actual annual election period, and do so in a fashion that serves as many people as possible, but also sets us up for the remainder of the year. We're less than a month away for the end of the annual election period, and we're looking to see how much we can get done, how quickly, in most cases in a different fashion. And so we've asked one of our premier partners to come on and visit with us about the portfolio that they have and the tools that are inherent in working with a major carrier. And so we'll be spending this time talking about selling with Aetna Senior Supplemental Plans to finish AEP in the setup 2021. Today's presentation is being recorded, and it, along with much of the material we'll reference through the course of the presentation and the presentation itself, will be sent to all who have signaled interest in our topic today through the email as soon as the recording updates. You'll notice in the software package that there is a section there for questions. We ask that you use that. We find we answer many of the questions through the course of the presentation, but we want to make certain we have all of the questions addressed and we properly speak to those questions and your interest. Today's presentation, well, we'll start with kind of a level set on who Premier Marketing is. Many folks are familiar with this, but for those who aren't, we are a national marketing organization founded in 1968. We're part of the Integrity Marketing Platform with offices across the country. We act as an insurance wholesaler, providing programs to the public through independent insurance agents such as yourself. And we do so through a contracting arrangement that's at the highest possible commission level, with recruiting contracts available to those who qualify. And as I mentioned, being founded in 1968, that means we recently celebrated a milestone in our history, our 50th anniversary. And we consider that quite an accomplishment for an organization that began as a small family agency in rural Nebraska that's become one of the largest marketers of its type in the country, particularly in the Medicare and ancillary worlds. And we do so through a full portfolio of insurance, including the major programs that affect the Medicare market, Medicare Advantage and Medicare Supplement plans, and the standalone Part D prescription drug programs. But we also offer a full portfolio of life insurance programs that include final expense life insurance and pre-need plans, additionally offering long and short-term care programs and disability income plans, and those ancillary benefits that I mentioned earlier, the dental, vision, hearing products, critical illness cancer plans, hospital indemnity, and accident insurance. That Medicare Advantage portfolio has a large number of options for you that include the national carriers and many of the strong regional carriers that make a difference for you in your market. And that same philosophy carries over into the standalone prescription drug world, where those national carriers are there for you for your use through our organization as well. You'll notice on this slide it does still list the Envision RX program, even though that has gone to an internal marketing process, no longer available to broker distribution. We wanted to make certain we leave it on there to make you aware of that fact that, well, if you have that contract, you surely are anyway. We want to make certain all the certifications and everything is in there so you do receive what is coming to you with that carrier. When you look in the Medicare Supplement portfolio, there's a robust selection for you as well, and we have tools that are set up to help you be successful in this portion of the Medicare space as well. Those ancillary products in each of those categories, the leaders in those areas are available to you, and you'll notice our guests today line up in each of those categories as a strong choice for you in this area. And we find a lot of times during annual election period, if someone has gone through and reviewed their products, they realize that their base plan may well be their best choice moving forward, or you address that. But there's always shortfalls in this area that enable you to offer additional protection for your prospects and clients, and we want to make certain that you're aware of that and how that's a strong function in finishing strong and setting up next year's possibilities. Because in the Medicare world, if you look at the aging in of the baby boomers, the silver tsunami, whatever it happens to be, we see that we're dealing with a very large number. But if we look at it just on the basis of age, there's a portion of people that turn 65 that don't access their Medicare benefits right away. So it pulls that number down a little bit. But there's also the population, about a sixth to the seventh of the Medicare population that's actually under the age of 65, accessing benefits through disability. And those are folks that can be served by the products we'll discuss today as well. Because these people that are under the age of 65 have some additional challenges in many circumstances, obviously with their health, if they're disabled, but also with their wallets. And we see that across the diverse population we serve in Medicare, with many of the people having 3+ chronic conditions and some challenges with their budget in many circumstances as well. So if we're able to set them up with a strong carrier with a diverse portfolio of products, we're able to help them not only deal with what their body is doing to them, but also what their wallet is. So having a plan in place with a small premium to address these needs is paramount in taking care of the folks that we deal with, because they're looking at different choices anyway. They don't have to do anything at all. Some of them will add just a drug program. Some of them realize that leaves them financially liable in certain circumstances, and so they'll pick up a standardized Medicare supplement plan along with that drug plan. But many are also selecting the Medicare Part C programs that integrate that all into one program. In each of these so-called solutions or options that they have, we'll put it that way, there's always a need for additional coverage and identifying the challenges that people have. And one of the things that we want to do to make that easier is make certain that we have a standard language that we're using. It's interesting, in each of our parts of our lives, we have little languages within them. And if we're discussing Medicare, well, gee, there are acronyms out the wazoo. This is a translation guide for that. And it's one of the things that will come to you as part of your follow-up package to today's webinar. Because remember, once again, we're not only harvesting, we're planting, moving into the middle portion and latter portion of AEP. We want to make certain we do everything we can to not only serve our prospects and clients, but ourselves as well. So we're asking our friends at Aetna to come in and visit with us about their programs and the systems they have in place to work it. And so our guest speaker today is Mr. Kevin Moore, who's the Regional Vice President for the South for Aetna Senior Supplemental Insurance. Great guy, very responsive. It's interesting to see, even on Facebook in the chat groups, how people in the back recognize the reputation of good people. And what we're dealing with today is definitely good people. So at this time, I'm going to turn the helm over to Mr. Moore and ask him to take it away. I'll remain quiet, which is odd for me and probably one of the best things for you, and we'll make certain that that's done. Kevin, the helm is yours.
All righty. Fantastic. Thank you so much, John, and thanks to everyone at Premier for the opportunity, and thanks for those who are in attendance today. I appreciate everyone taking time out of your busy schedules to spend with us. I know it's a busy time of year. Hopefully everyone's having a fantastic AEP so far. John, call me out and let me know if you can't see my screen, but I think that everyone should be able to see it now.
Good.
Great. Thank you. So what we're going to do today, is try to touch on as many of our products as we can and try to keep it short and sweet for you. I know, especially during the pandemic where you've all spent a lot of time on web meetings and different online conferences, so it can be a little bit of an experience to be on those back to back. So I'm going to try to make this as short and sweet as possible, but still cover a lot of ground and give you some good info. This is by no means going to be a full-blown training on any one product that we have, but more of a hey, here's an idea of what this product can do for you. And hopefully that sparks some interest and maybe generates a conversation between you and I or our team later on down the road so that you can get more information on a product. But either way, want to let you know that we're here for you. Here's my contact information. If there's ever a question or a concern that I can address for you, please feel free to give me a call or send me a text or an email. And then the same goes for my team. I've got Justine and Suzanne who support the South region as well and are very much invested in helping and supporting any and all agents out there. And even if you don't happen to be in one of what we consider the Southern region states, call me anyway. We're happy to help and support you. The other thing that I want to call out on this particular site or this particular screen is our website. Anything and everything that I referenced today, you're probably going to be able to find additional information on our website. And I just want to make sure everyone knows what that is. It's AetnaSeniorProducts.com. Again, AetnaSeniorProducts.com. So, anything we talk about or anything you want to access or download, you can start there and probably find just about anything and everything about our products available to you to help you serve your clients. Really quick history or background on us as a carrier. Many of you may be familiar with or have heard the name in the past, Continental Life. It's an old med sup carrier that's been around for over 35 years, based out of the Nashville, Tennessee area. That's us. We've just been owned and operated and a part of the Aetna family since 2011. And over that time, since 2011, it's grown into one of the large major carriers in the Medicare Supplement business through Aetna, of course. So we're still in many ways that small company, but part of a big, large family and have the backing and support of a big, large family company like Aetna and CVS now, as many of you are probably aware. So we've got a great agent services team there in our office in Franklin, Tennessee, which is a suburb of Nashville, by the way. We're very focused on business persistency. We know it's important for you that when you write business that it stays on the books. It's important for us too. We do our absolute best to bring you competitive premiums, and that's one thing I'm very proud of. I think if you look at any of our products, you see that when you compare it to the other carriers or the other similar products out there, we're going to be just as good, if not better, in most scenarios. Same goes with commissions. We pay just as well, if not better, than any of our competitors out there. We have growing renewals, and what that means is that with any of our products, when you write them, when you place them, as long as that policy exists, you're going to have lifetime renewals on it. So there will always be some sort of renewal coming from any product that you place. Our core product, our primary product is our Medicare Supplement. But in addition to that, we've got a complete lineup of other products that are designed for cross-selling. And that's what we're going to try to touch on quite a bit of those today to give you an idea. We are an A-rated company by AM Best. So that means that you're working with one of the best, and for your policyholders, your clients, they're getting service from one of the best. We do operate under 5 different charters or entities, which you'll see listed here: Aetna Health and Life Insurance, Aetna Health Insurance, American Continental, Continental Life, and then our newest, Ascendo Insurance Company. These are not separate companies, despite the way that it looks or sounds. They're just different entities that we use for filing products. They're all operated under our umbrella, Aetna Senior Supplemental. But you may see various products that are filed in different ways. Like Ascendo's the new one. It's just come out this year, and we filed quite a few products under it. But we still have lots of other products under the Aetna Health and Life or Aetna Health Insurance, as well as American Continental and Continental Life. Doesn't mean it's with a different company, just different entities for product filings. So here's a quick list of all the products we offer. I've already mentioned the Med Sup. We also have a critical illness plan called Cancer and Heart Attack or Stroke Plus, hospital indemnity, a dental vision hearing plan, our 2 short-term care plans, Home Care Plus and Recovery Care, which you see listed there. And then we also have a final expense plan. We're going to try to hit just a little bit on each one of them today. Here's our latest product availability chart. I always like to show this, not that I expect you to get a lot out of this specific slide, but just want you to know that most products are available in most states, but depending on where you are, it's possible that a certain product may not quite be available yet or may not have been approved yet. So it's always beneficial to check this chart, which is always available on our website. Again, AetnaSeniorProducts.com. If you just check there, you can check our product availability and see if the state or area that you want to market in has the product that you want to talk about. So I want to spend a little bit of time on our Medicare Supplement. After all, it is our main product. I don't ever like to do a Medicare 101. That's not really what I look at. I figure if you're on this phone call, you probably already have a general idea of how the Medicare Supplement works. But I'm going to just kind of give you some of the highlights and high points of where our product can be helpful and beneficial and what you should know about it as an agent. First, I want to show you we have a product in every state that you see there in some shade of purple. If it's a darker color, we don't have a product. As you can see, we have something in just about every state. There's a few exceptions in the Northeast and in the Pacific Northwest there. But, most states in the country, you're going to have a med sup from us to market. Why would you want to choose a med sup from Aetna? We have a broad choice of plans, and that's really true. One thing that I've noticed in the industry is that different agents and different clients prefer different types of plans. And with us, you have a variety. We're usually going to have a competitive plan F, a competitive plan G, and a competitive plan N. And there's a whole strategy of us behind us doing that. And I'll get into that a little bit more later, but you have the flexibility and the options there with us. Your coverage is also portable, which isn't necessarily true with other carriers. What that means is that if you happen to buy a product in a particular state, I'll just say, if you buy a product in Texas, for example, and let's say you were to relocate for some reason to California, if you did that, the original product that you bought in Texas is still going to stay tied back to the book of business in Texas. You're not going to be subjected to any new rate based on your new zip code, your new address. So we don't re-rate when you move. As long as you keep that policy, unless you change it or drop it, then you're going to stay tied back to where you originally bought it. And that can be pretty big in some cases. Texas to California is a pretty big example because Texas happens to be a really good place to buy a med sup, and California is a pretty expensive place to buy a med sup. Your policies are guaranteed renewable, of course, as long as you pay the premium. There is no pre-existing condition clause. As long as we accept you as a member, we're going to cover you for everything. We're never going to say, oh, you had this condition and we won't cover that for, ever, or for 6 months or a year or something to that effect. We're going to cover you for everything immediately. I know that some other carriers sometimes will exclude certain conditions for a certain period of time. I mentioned this before, but I'll just say it again. Typically you're going to see that our commission rates are going to be very competitive, which we all know that's very important. I know that we do this to help our clients, but we also are trying to make a living at it. So how we get paid and what we get paid is important. Competitive premiums, as I mentioned before, we do our absolute best to bring you good value in our products. So I think you'll see that more often than not, we're going to have very competitive rates. And then we do various sales incentives to help put extra money and extra things in your pocket from time to time as well. And I'll talk more on that later. We also have a new second Medicare supplement. I say new, it's not quite as new anymore. It's been around for over 6 months now, depending on where you look. But we've launched a second Medicare supplement. So the Aetna product that most people are familiar with and know and love is still there, and it's not going anywhere. The new Med Sup is not intended to replace the Aetna product in any way. It's meant to be a different product. And that product is called Ascendo, which you heard me mention earlier. And it's actually filed as a CVS product, but it's administered by us, by Aetna. And you can access it through our same website, AetnaSeniorProducts.com. You can get all the additional information on Ascendo. Here's our most current map on Ascendo as of October 9th, where we've launched products. As you can see, we're covering up most of the country, still a few states out there that we're working on. If you don't see the product in the gray area states yet, that doesn't mean that it won't be there. It means we filed it at least, so we're working on it and hope to launch it soon. So sit tight on that. But, Ascendo is a really, really interesting product. The thing that sets it apart or makes it different than the Aetna product, other than the name, is the way that we administer the household discount. We looked at the industry and we looked at our competitors and we tried to determine, what are the strategies that are effective, what works best, and what is it that clients want. And we found that there's things we can do with the household discount that we can really take advantage of some opportunities there to help more people. So just to compare it to our existing Aetna product, and if you look at this chart, it kind of tells the story. So with our existing Aetna product, in most states, you can expect to see a 7% household discount. And then who qualifies for that household discount is a factor on the Aetna product different than it is on the Ascendo product. So to get the household discount on our Aetna product, you must have two people living together who are both policyholders. They both must be policyholders with us in order to receive that 7% discount. With the Ascendo product, you've got a much higher household discount. As you can see there, in most states, it's going to be 14%. There are a few exceptions in some states, but it's going to be 14%. And the way you would qualify to receive that household discount is not going to require a second policyholder. You simply need to have another adult living in the same home with you. So, and it's between 1 and 3 adults. If it's more than 3 adults, then that would disqualify you for that household discount. But between 1 and 3 adult roommates, that entitles you to the household discount. None of the other roommates need to be on a plan with us. So just a quick example, if I had a scenario where I had a senior who was looking at the Ascendo product, and let's say they had a grandson that lived with them who was an adult over the age of 18, or even a son or a daughter, then that would qualify them because they're considered an adult. In most states, 18 would be an adult. It's going to depend on what state they live in, what they qualify as an adult. Most it's 18. I know some I've been to is 19. Some I've been visited have been 21, but it just depends on the state what they consider an adult. So as long as you have that adult living with you, then that qualifies you for that 14% discount. And that's huge. And if you do the rate comparison, which on all our rate comparison tools, which I'll share more info with you later on about, applying that 14% household discount to those that qualify for it can really, really be a huge savings. So that's where Ascendo comes in. If you're comparing Aetna and Ascendo on paper in most states, Aetna is probably going to be a little cheaper without the household discount. But then when you factor in the household discount, Ascendo is usually going to be the better product as far as value goes. So that can be a really, really big difference. So we're excited about Ascendo. In the 6+ months that it's been around in the market, it's done very well. It's been very popular, and we're very pleased with what we've done with it so far. The other thing to note, besides the difference in name and besides the difference in the way the household discount works, is going to be the application fee. With the Aetna policies, there's a one-time $20 application fee. With Ascendo, it's a one-time $25 application fee. So a minor difference. Tried to offset there a little bit, maybe with the household discount. That's why you see it to be a little bit higher. So here's all the current states that it's in, and I know I already showed that once, but just so you know, and that's just a little bit of a difference. Like Florida, for example, we weren't allowed to file there with the household discount. For some reason, the state didn't allow it. I think they're slowly moving away from household discounts in the state of Florida, so that's why they're not approving any new products there with the household discount. But we still filed the product with competitive rates despite the no household discount. In Illinois, you have to have two people who are both on an Aetna or Ascendo policy. That was a requirement by the state. In Ohio and Oklahoma, two people must have an active Ascendo policy. So a little bit different there as well. And then Pennsylvania, the person that you live with, you must be in a legal relationship with them. These were all state requirements. They weren't requirements by us. Everything else is going to held just like I told you. As long as you have an adult roommate, they don't have to be on a policy, and you get the discount. So moving forward a little bit away from Ascendo and the Aetna Med Supp, I wanted to show you some rate examples. These are our heat maps, and this is going to be for both products, Aetna and Ascendo, and I'm going to show you Plan G based on an age 65 female without the household discount. Really the easiest thing to know about this and how to read this is anywhere where you see blue or green, we're going to be pretty darn competitive. And the bluer it is, the more competitive it is. So that's where you can expect to really do well with Plan G for us in the country. And I'll provide copies of this to John so that if he wants to distribute to anyone after the call, you're welcome to do so. But I just want to flash this out there because, as I mentioned before, we're typically going to have a competitive Plan G, Plan F, and a Plan N, and there's a strategy behind that. And the reason you hear me mention Plan N is because I think the market is gradually going to Plan N being a more popular option. And I'll show you the heat map on that here in just a moment as well. Here's the same heat map as the last slide, but with the household discount applied. So you see a lot more blue and green popped up, making us even more competitive when you get that household discount involved. That's, again, going to be on Plan G. And I'm just using an age 65 female as a baseline because that's kind of what we typically do. And here's going to be a Plan F. And a lot of you may be scratching your head and wondering, well, Kevin, why are you talking about a Plan F? Nobody writes Plan F anymore. Well, quite the contrary, in fact. If you notice here in a big section of the country, we actually have a very, very competitive Plan F. This is going to be age 65 female with no household discount. Here's with household discount. And so why are we so competitive with Plan F in so many places? Well, we developed a strategy at the end of last year, at the end of 2019. Plan F changed from it used to be the default guaranteed issue option. We launched new Plan Fs at the end of last year in the states that you see us being competitive with competitive rates, because those Plan Fs aren't going to take on as much guaranteed issue business. For those who aren't familiar, there was a law that went into effect on January 1st of this year called MACRA. And MACRA basically kind of changed the way Medicare Supplement guaranteed issue business works. Everything used to go to Plan F, and you do still have some that will go to Plan F, but by and large now, most guaranteed issue business going forward is now going to go to Plan G. And what that means for your Plan G rates is you're going to see them start to get higher and higher. Well, us trying to take advantage of that opportunity, we came in with new competitive Plan F rates in all the states you see listed here. And they're newer blocks of business that won't take on as much guaranteed issues, so they're going to stay competitive for a long period of time and should experience minimal rate increases. So don't be afraid for your clients who still qualify for Plan F. And by the way, anyone who became eligible for Medicare prior to the end of 2019 will still always be able to choose a Plan F, at least on an underwritten basis. And that's part of the reason also that you can expect lower rate increases, because it's going to be a mostly underwritten block of business. So just kind of food for thought there on Plan F. And then here's the other thing, and you heard me talk about Plan N a couple of times now. Here's our Plan N rates, our heat map for an age 65 female without household discount. And then you see it's a little bit more blue with household discount. The reason you hear me talking up Plan N so much is because when MACRA came into effect on January 1st of this year, that kind of changed the market for Plan G quite a bit. You're going to be taking on a lot more guaranteed issue on Plan G. So that means, like I said, you're going to see higher and higher rate increases on Plan G. And that's probably not just for Aetna. That's going to be for most carriers. So Plan N is kind of the next natural progression. If you went back in our business about 10 years, everyone was writing Plan F. And then not long after that, everyone switched and started writing Plan G. Well, I'm here to tell you that I think over the next couple of years, you're going to see that everyone's changing from Plan G to Plan N. If any of you ever want to have a conversation about Plan N, you're welcome to call me. I can kind of explain to you how it works if you're not familiar. It's a wonderful option. There is a little bit more potential risk out of pocket for the client, but the savings and premium can be massive. So I'm a big fan of Plan N. If I was going on Medicare today, I think I would be choosing a Plan N. In fact, I know I'd be choosing a Plan N for myself. Big fan. And I think a lot of our business, in fact, our sales over the last couple of years have really highly increased. In fact, Plan N is counting for close to 40% of our overall Medicare Supplement business right now. So it's been a huge increase in Plan N sales for us, because we've been talking about it. And also in quite a few states, we raised commission in Plan N. So even though you're writing a little bit lesser premium, we've done things to offset that in most states so that you still get paid like you're writing a Plan G. So highly recommend you take a look at Plan N. And that's about all I had on MedSup. I want to kind of move forward and kind of touch on some of our ancillary products. And by the way, I'm sure John mentioned this. If he did, I didn't notice. But if you have questions or comments or feedback, type them into the box, into the webinar application, and we'll touch on those at the end. John will read those questions, and we'll do our best to answer them. So any questions you have about the MedSup, type them in, and then we'll come back to them at the end of the webinar and answer as many as we can. So for now, though, like I said, I'm going to move away from that and start to touch on some of our ancillary products. I want to start off by kind of setting this up with some of the real-life certainties that we all face. These are potential health-related impacts from a cost perspective. So some of these date back to 2017 or 2018, but they still hold true and hold value now. The first one is that 71% of those who are 65 or older did not have dental insurance in 2017. Well, we have a product for that. There's a lot of seniors out there looking for, either just some level of dental coverage or just to add or enhance their level of dental coverage. So we have a plan that can do that, and we'll go over it in a little bit. Also, cancer diagnosis. Did you know that 42% of the costs associated with cancer are indirect, meaning they're non-medical, meaning that really you don't have any insurance that covers that? So we have a plan, that covers you if you have a cancer diagnosis, and it pays you a lump sum cash benefit. It's designed to help pick up your medical cost or anything that's not covered by your insurance to help offset those out-of-pocket expenses that are going to be associated with your treatment. If you end up needing to spend some sort of time in a facility, which we all are likely to do at some point in our lives, you may not be thinking about it today or now, but there is a chance that at some point in our lives, a pretty good chance, unfortunately, that you'll need to spend at least some period of time in some type of a facility. That can run anywhere from $3,700 a day, monthly, $3,700 up to $8,100. Depending on, what level of care you need and whether you're getting a private room or a semi-private room. So we actually have plans that can offset that and help pick up those costs. There are short-term care plans, and I'll touch on those here in a little while. Almost 40% of adult Americans are not able to cover a $400 emergency and pay it off quickly. That's a huge concern. 1 out of 4 adults skipped medically necessary medical care, in 2018 due to affordability. And that's a tough spot to be in and not anything that anyone wants to face. And that's what we have these plans that are designed to help pick up those costs when you need that help. And then, of course, the final expense is still going to run between $7,000 and $9,000. So we have a plan that's designed for that. I always find this slide interesting. It really kind of puts in the picture in a frame in terms of how likely you are to use your insurance, your various types of coverage that you carry. For one, if you have a homeowner's policy, you have a 0.04% chance of filing a claim on that policy. I'm one of the unfortunate ones that I had filed a claim within the last 60 days myself. I had a pipe burst at my house, and that was an unfortunate thing. But it was such a fluke and something I never expected to happen. I don't know that I'll ever have to file another claim. Maybe I will, maybe I won't. But the chances and the likelihood are very, very slim. Auto policy, for the most part, once you're an established driver, your chances of needing to regularly file claims is very low. In fact, it's a 0.06% chance on most auto policies that you'll ever file a claim. Now, cancer, most of us don't have a policy, but there's the chances of us, if we were to have a policy, the chances of us filing a claim is about 40%. So, we have to have homeowners insurance. We have to have auto insurance. We should also be required to have cancer insurance because the chances of us needing it are extremely high. They say right now that it's 1 out of 2 men will be diagnosed at some point in their lifetime, and it's 1 out of 3 women. So, the odds are unfortunately very high that you'll be touched by this at some point. Long-term care, that's, again, something we don't think about and hope we never have to deal with. But the chances of us needing that type of care at some point in our lifetime is very high. If you have a policy, you have a 70% chance of filing a claim. Dental, if you have a dental policy, you have a 100% chance of using it. We all want to take care of our teeth. A final expense policy, yes, death is still unavoidable, so you do have a chance, or 100%, chance of filing a claim if you have that type of coverage. So we have those types of products, and that's what we're going to kind of get into now. So the first one I want to talk about is our critical illness plan, cancer and heart attack or stroke plus. It's really two plans if you boil it down, because you have the ability to sell it as a cancer-only plan, which by and large is what's being done now by our field force. But you can also sell it as a heart attack stroke plan only, which we sell quite a bit of that as well. Or you can combine the two and sell both, and then you're covered for the three major critical illnesses that we're likely to face at some point in our life. So I don't want to spend a lot of time on the risk. I'd rather kind of tell you how the product works. Just know that the risks are very high, and it's important coverage for everyone to have. I'm a policyholder myself. I'm a big believer. You know, I saw my mother suffer with cancer, and she passed away at an early age from it. And I just saw what it did to her financially. And that's the last thing I want to ever put any family member through, especially when you're, you know, fighting for your life. This is a plan that can really help you at a time that you need it most. So issue ages on this policy, you can write it on, it's not just for seniors, as you can see, it's anyone between the ages of 18 and 89. And you can cover those younger than 18 also on a family policy. In fact, I have a policy that covers my whole family. It's a family policy for myself, my wife, and our two children. So 18 to 89, it's a lump sum benefit that's paid out, and you can select as low as a $5,000 face amount, or you can go as high as $75,000. It's a simplified issue product, which means that basically you're just having to ask yes or no questions on the application. That's the underwriting. You can write it over the phone using our e-application, or in person using our e-application. All of our products, by the way, you can write using our e-application. There is a recurrence rider that can be added on. So the way the policy works today is, for example, me, I have a policy, if I was to be diagnosed with cancer, that I'm going to get my lump sum benefit. And then really for me, my coverage is done at that point. I still have coverage for heart attack or stroke, but that's kind of separate. But if I were to have the recurrence rider, I have a rider that will build my benefit back up over a period of years. And if I'm diagnosed with cancer again later down the road, then I can get a second benefit. So that really is valuable to get that recurrence rider, and it's very affordable. I mean, it's less than $1 or $2 a month in most cases. So highly recommend that you keep that on there, because, you know, once you've been diagnosed with cancer, your chances of being diagnosed a second time are extremely high. As I mentioned before, you can cover an individual. You can cover an individual on a spouse or domestic partner. You can do an individual and children. That's for your single parents, or you can do the full family plan. If you do a plan that covers children, the kids are covered until age 26 or until they're financially stable. So, and I can speak from experience on that. It's age 26 because they're never financially stable. I'm kidding, of course. It's the same benefit for each covered person. So like, I'll use my policy again as an example. I have a $50,000 policy. So if I were to be diagnosed with cancer, there'll be a $50,000 lump sum tax-free benefit paid out for me. But that just takes my benefit. My wife and my children are still covered for the same amount. So if they're later diagnosed with cancer, then they still have their benefit available to them. It's designed to help offset out-of-pocket expenses, like I mentioned before. Benefits are paid upon diagnosis. You don't have to be hospitalized, and you don't have to go through treatment. Some just may say, you know what, I don't really want to go through treatment. I'd rather just, you know, or maybe they want to have an alternative treatment of some kind that's not covered by any insurance. That's fine. They're going to get paid cash to do with whatever they want, whether they get treatment or not. There is a 30-day waiting period. So if you were to write one of these policies, you need to advise your client they are not covered for the first 30 days. After that, they're covered. So when you write these, you want to tell them, hey, don't go to the doctor, don't have any tests done, don't get anything, you know, diagnosed during that first 30 days. One thing that's very, very unique about our product versus some of the competitors out there, and I want to stress this because this can be a really big life or a money-saving opportunity and life-saving opportunity. With us, if you're going to write a couple and you have a age gap between the couple, the spouses, let's say one is significantly younger than the other, then you can, and you always should, put the youngest person as the primary on the policy, and that means all the rates will be based off of that person's age. So, my favorite scenario I ever had on that is I ran into someone who had a husband who was about 30 years older than them. And so they actually, bought a policy and based it off the wife's rate or wife's age. Their rate was very, very low, and that husband, got a huge discount on that. So one other thing that I'll mention that's unique about our product is we do not have a tobacco rate. So what that means is, when we will sell to tobacco users, but we don't have a higher rate. So everyone gets the same rate, whether you're a tobacco user or not. So that's kind of like an automatic discount for a tobacco user who's, more likely to have that type of diagnosis anyway. We oftentimes get asked, is there any type of cancer that's not covered? Really, no. I mean, just about any type of cancer is going to be covered. But I will say that with skin cancer, it must be the serious form of skin cancer to trigger a benefit, which is called malignant melanoma. That would trigger a benefit. If it was something like basal cell, that's not going to trigger a benefit. So here's a couple of examples I worked up of a 65-year-old. If you were to sell them a $10,000 lump sum policy, if you did the cancer only, you're looking at $29.58 a month. If you did the heart or stroke only, that'd be $30.83 a month. If you added the recurrence rider on the cancer policy, you're looking at only $32.43 a month. That's less than $1 a day, or just about $1 a day. And then if you did the heart or stroke only with with the recurrence add-on, you're looking at $34.75. Now again, they're two separate products. If you sold the full package with cancer, heart, stroke combined, you're looking at $60.41 monthly. And then if you sold the full product with the recurrence riders, you're looking at $67.18. Typical commission, and again, I don't know anybody's commission rate that's on the phone, but I just know based on what is typically a first-year commission, you're looking at, and this is without renewals being factored in, this is just first-year payout, you're looking at around $362 in your pocket for that first one. With the recurrence, it's around $403. And by the way, during the first 10 years of paying premium, the client would pay about $8,000 in premium. And during that time, they would be entitled to over $40,000 in benefits. So the value is very good on this product. And again, I highly recommend that everyone have it because, no one wants to think about cancer. And that's the challenge with this product is once you start talking about it, people have a negative connotation or a negative stigma with the word cancer. They think you're trying to sell them cancer. Well, you have to fight through that. Talk to them about their own personal experiences. Ask them if they've ever had friends or family that have had a diagnosis. Get the conversation started and then explain to them, what their risks are. And we have a brochure that I didn't show, but it's really good at educating your clients about how exposed they are and what the risks are. And then, get them open to the idea of having this type of coverage. And I think you can do a lot to really help your clients here. So going to move away from that product. I'm going to kind of try to quick hit some of these to save everyone some time. The next one I want to touch on is hospital indemnity. Really the biggest thing I can say about a hospital indemnity product is if you are in the senior market today and you're offering Medicare Advantage plans and not helping or offering your clients a hospital indemnity, you're really in some ways doing them a disservice. I almost kind of look at it like this, you very, very rarely run across someone today who has original Medicare only. They obviously have a Medicare Supplement or a Medicare Advantage plan. Well, when you look at a Medicare Supplement policyholder, they stuck with original Medicare and added the supplement on to pick that up. Well, when you choose a Medicare Advantage plan, you still are leaving yourself exposed for some out-of-pocket costs. So that's where I think a hospital indemnity really, really needs to be offered. And you actually do have agents out there today who, if you're not offering it to your clients, they are targeting your clients and they're offering this hospital indemnity, because that's exactly what the hospital indemnity is designed to do. It's specifically set up to help pick up the cost that your Medicare Advantage plan will not cover. So when you start talking about Medicare Advantage, it's a great program, but there is some exposure there when it comes to hospital stay. If you end up in the hospital, you're likely going to be out of pocket somewhere between $1,200 and $1,800, depending on how long you ended up in the hospital. Well, with this plan, we call it Flex because it's very flexible. You can design it how you think is best to cover your needs. So you can do a lump sum benefit of up to $2,500 when they're admitted to the hospital, or you can do a daily benefit of up to $700 a day for when they're in the hospital. That's the basic hospital benefits. You either choose lump sum or daily, and then those pay out when they end up in the hospital. And then you have a ton of other benefits that can be added on as optional riders. You can do skilled nursing, which is a huge concern because chances are if you end up in the hospital, they're going to try to get you out as quickly as possible, and you may not be healthy enough to go home yet. So you may end up spending some time in skilled nursing. Well, this will put cash in your hand. And I know, they may already have some other type of coverage for that, depending on what level of care they have already. But this is going to pay cash in addition to any other benefits they already have. So put money in their hands right away with this skilled nursing benefit. You can also cover a doctor visit of up to $60 per visit, 20 times per year. You can do an outpatient surgery, $1,500 once per year. So if they go in for some type of procedure in the morning and they're out in the afternoon, you can cover that once per year at $1,500 maximum. You can do an ER visit or ambulance ride, $200 twice per year, must be medically necessary. And then you can actually add on a cancer diagnosis rider. So a one-time cancer diagnosis will pay them an additional $2,500, $5,000, or $10,000 once per lifetime. And then another big consideration, a lot of times when you end up sick, or from an accident, you have an injury or you need to heal or get better in the hospital, a lot of times outpatient rehab is a big part of that. So those can get pretty pricey. They're usually around $50 per visit, where you can add on a rider that covers them for 15 or 30 visits a year at $50 per visit. So big benefit there. Here's another example I designed of a hospital indemnity flex plan for a 65-year-old with $300 of daily hospital coverage for 5 days, plus $200 of daily skilled nursing, $5,000 lump sum of cancer. You're looking at only $53 a month. That's huge. That's not a big premium, and it's never going up, by the way, because we don't increase our premiums on our ancillary products. So you could actually create a scenario where they have a Medicare Advantage plan that hopefully has a zero premium and will always be a zero premium. And then you've got an add-on there for only $53 a month that doesn't go up, that picks up their out-of-pocket costs. The typical first-year commission on that is going to be about $350. Then you have another one below. It's got a little bit richer benefits for a 68-year-old, $70 a month premium, and that's $466 in commission. I realize you may have questions, but I'm going to keep going forward because we're going to take those at the end. The next two products I want to talk to you about are going to be our Recovery Care and our Home Care Plus products. Recovery Care is designed to help you if you need to spend time in a nursing home or assisted living. It will pay up to $300 a daily coverage, and then you can choose whether you want to cover 90 days, 180 days, 270, or 360. You can get a full year. Really where this comes in handy is for your people who are needing long-term care, but they can't afford it or they can't qualify for it. Long-term care is really hard to get these days, for those who may not be aware. We all really need some form of long-term care, but again, it can be really expensive, and it can also be really difficult to get underwritten for. So this is a simplified underwritten product, not overly complicated, not a lot of health questions, and it's also very affordable. You can cover them up to a full year for a nursing home. And then you can also do a home care rider that you can add onto this in most states. where they get a full extra year that can be put, optionally added on, that will offer them care in their home for up to a year. So in the right scenario, you could build this out to be a 2-year plan, which a lot of people do, and they, really appreciate this benefit when you need it. So recovery care, take a long look at it. I think it can be very beneficial. Here's a modeled policy that I came up with for a 65-year-old, $200 of skilled nursing, 180 days of skilled nurse for 180 days, and then $450 of weekly home care for 13 weeks. You're looking at only $67 in premium monthly, and then that entitles them to $83,000, almost $84,000 in benefits, and your typical commission on that's about $445 the first year. And then you got one below that that's pretty similar, a 68-year-old for $200 of skilled nursing for 90 days, $600 of weekly home care for 26 weeks, $74.17, and that's $67,000 in benefits, commission of around $490. And then home care is very similar to the recovery care product. It just doesn't have the nursing facility benefit. It's just for you to specifically have up to a year of home care. The thing I'll say about this is if you have a potential client who's got some health challenges, but they want to buy something, this would be your first product that you'd look at. Of all of my products, this one has the least level of underwriting. So you can get people through on this. I'll just give you a couple examples. If they've had cancer, but they've been healthy for as little as 1 year, you could write this potentially. If they've previously been diagnosed with Parkinson's, you can still potentially write this policy. If they've been recently, or if they have in the past been diagnosed with memory loss or Alzheimer's, you can still potentially write this product. And so the benefit is up to a year in home care. You can do 13, 26, 39, or 52 weeks. And then you can do an optional cancer rider on this, $2,500, $5,000, or $10,000. And then you still have the option to do that $200 hospital ER visit and ambulance service on this product as well. Here's a couple of examples I worked up. For a 65-year-old, if you did $1,050 weekly home care for 39 weeks, plus $2,500 of lump sum cancer, and an $81 premium is what you'd be looking at. That'd give them $84,000 in benefits, and that'd be $488 first year commission. And then you've got a similar one below that has a $95 premium and a $93,000 total benefits, and $570 first year commission. So again, home care, the biggest thing to remember is that if you've got someone that's got some health challenges, this could be a go-to product for you. Recovery care is kind of the first best option because home care plus can be a little bit more expensive. But again, if you want to get something but you have trouble qualifying, home care is probably going to be your go-to. All right, moving forward now still. I know I'm piling through a lot of products pretty quickly, but I just want to kind of give you quick hits on everything. And then, you can ask questions later, or hopefully that prompts you to go to our website and learn more about the product. So our dental vision hearing's a really popular product. I think the three things to remember for me, that I always try to share with everyone about our product is, one, we're going to be more competitive on price than most of our other companies out there who have similar products. You get big discounts by going in network on this plan, so you get great benefits. But in addition to that, you can save a lot of money just by going to our carrier partners. Carrington is the chosen network for this. You can go out of network. You don't have to go to a Carrington dentist. But I really think you're not doing yourself any favors if you don't go to a Carrington dentist, because they're going to knock a lot of money right off the top on any procedure or anything you need done just by going to a Carrington dentist. And then the third thing is it's Aetna branded, and that carries a lot of weight with a lot of clients. Aetna's a household name, and it's a very long-standing. We've been in business for over 160 years as a carrier, and we have a great track record. So that popular name certainly helps as well. You can write this on anyone between the ages of 18 and 89. You can cover, obviously, children as well because it's a family. You can do an individual or a family policy. Unlike our cancer plan, you'd have to put the oldest person as the primary. It is guaranteed issue. There's no health questions. It will cover dental, vision, and hearing. You can do up to, and actually I need to update this slide because we just recently changed it so that they can get up to $2,000 or even $3,000 in annual coverage. So you can pay more and get more benefit now. Previously it was only $1,500. So here's all of our partners for network. It's going to be, as I mentioned before, Carrington for dental. For the vision discounts, you want to go to iMed or VSP or QualSight for LASIK. And then for hearing, you want to go to a true hearing specialist. I'm going to skip over some of these and just kind of show you the breakdown on us versus some of the other carriers out there. So this is going to be based on a 68-year-old with a $1,000 benefit plan. So for us, it runs around $31.28 a month. The closest competitor there is another carrier that would be at about $34.17. You got another one there at $37, another one at $35, and then another one at $56. So we all have basically the same levels of coverage. It just, the deductibles vary a little bit. We have a $100 deductible, but most other carriers have the same as well. And the same waiting periods, usually for major dental work, you have a 12-month waiting period. That's going to be the same with the competitors as well. Moving away from the DVH, I want to just give you a quick rundown on the new Ascendo final expense product that we have. It's available in most states, as you can see. We offer a super preferred rate. That's going to be for anyone who has gotten a Med Sup with us, either in the previous 6 months or in the next 6 months, and they also have an Ascendo final expense policy with us. So if they've got a Med Sup with us and it was an underwritten, by the way, it must be an underwritten Med Sup, then they can have their premium, or their premium is just decreased by 10% on their super preferred rate. So if they get an underwritten Med Sup, that saves them money on their final expense plan. You can set up Social Security payment option. There is other optional riders available. We've got a big qualifying ages from 40 to 89. You can do flexible coverage anywhere from $2,000 face amount up to $50,000 face amount. We have level and modified. So level would be for someone who's fully healthy. Modified would be if they had some health challenges. Again, $2,000 up to $50,000 depending on age, and up to $25,000 depending on what their health status is. We have these riders available. You can do an accelerated death benefit rider, which pays up to 50% of the death benefit minus any policy loan they may have. They can also do the accidental death benefit rider. This will pay 100% of the base amount, so you can really get your full amount plus an additional 100% of that amount if it was an accidental death. And then you can cover your children or your grandchildren on a rider for this as well, which is a great benefit. Want to just share this. Our Aetna Quote and Enroll tool. This is our online application. I just have a couple of screenshots in here to show you how easy it is. It's kind of like shopping on Amazon. It's become very handy for us during the pandemic. Our business has decreased from paper applications and increased significantly from e-applications because of so many people, trying to see clients virtually. Our e-app's amazing. We get time and time again from our industry partners telling us how much they love it and how much their agents love it. So I would encourage you to take a look. It's available on our website, which again is AetnaSeniorProducts.com. You also have the ability to download a quoting app on your phone, on your mobile device. You can go to the Google Play Store or the Apple Store to download this. You just want to search the words quotes on the go. Again, quotes on the go, and then you'll see that purple icon pop up with that Aetna logo. If you download that, it doesn't require a password or anything like that. All the products that I talked about today, you can quote from your phone really easily, and it's very handy to have. Want to let you know we're here to help you. You can email us at aetssi.information@aetna.com. Our website again is AetnaSeniorProducts.com. Our phone number for support is 272-6630. Here's our latest sales incentive. I won't go deep into detail on it. Just know that you, in addition to commission, can get some extra cash, bonus money. For underwritten apps, it's $75 per app if it was done online using the e-app. For open enrollment, it's $25 per app if it was an e-app. If it's a paper app, it's decreased down to 25 or 10. And then we also bonus you $25 per app on the ancillary products that we discussed as well. Once again, here's my contact info. Feel free to give us a call, either myself or Justine or Suzanne. You can also text or email us. We're happy to help and support you. I will say thank you and turn it back over to John if there are any questions.
It appears, Kevin, you've done a tremendous job as usual. There's actually not a single question today. So I would like to throw out one last thing as well to make people aware of the fact, or nudge them to remember, that a lot of what we do in the Medicare space, if we're working according to some of the statistical guidelines we see, we're seeing about half and half of the folks aging in or utilizing Medicare the first time go either Medicare Advantage or Med Sup. If you are operating in the Medicare Advantage arena now, where most folks are, you realize that the commission on those products is detained until after the first of the year. When we look at the plans that are offered and discussed today, the Med Sups, paid on issue, the ancillary products, which is a natural adjunct for whatever the regular choice is paid as issued in most circumstances as well. So we want to make certain that we're doing what's right for our prospects and clients, but we also want to make certain that they realize that the monies that are out there are part of the packages that are available to them, and that this is subliminal advertising as I go through this. And we want to make certain that we take care of you as well as everything else that is necessary in today's hectic new normal world. As Kevin mentioned, their resources not only behind their products, which is obviously first rate, but the support behind that with the systems and everything else that comes into play is a big factor in working with Aetna. And phasing into just a real quick guideline or ending up of today's webinar, there's some things that you also get additional support from us here at Premier. And one of the things that we do is enable software systems that allow you to contract electronically. This system here, Assurance Bay, allows you to create an agent profile, contract with multiple carriers quite easily. At this point in time in the year, and we look at what is being offered by Aetna, we would like to do an electronic system directly to Aetna to speed up the process. Not that this really slows it down, but you can see some differences in the speed of contracting if we go direct to particular carriers that operate well in that space. And obviously Aetna is one of those. We also offer discounted errors and admission coverage to qualified agents. What makes you a qualified agent? Well, you got to contract with us. But this is a program you own, so it's not like being added to a blanket E&O policy where you have coverage for just one product with one hierarchy. This allows you to contract as an independent agent wherever you want to go, and you've got a program that covers you wherever you go, and it's at a very reasonable rate. There's also the opportunity to make certain that your licenses stay in play, and we do that through bundled CE continuing education packages with our partners over at WebCE. We also offer a program for you to enhance your own benefit package, a disability income modified guarantee issue that you participate in the commissions on. So it's a great way to protect your income and earn by selling to yourself, in essence. Much as where today's presentation is being recorded and will be available very shortly after the presentation as the recording updates, we've done these webinars with a number of different topics. They're all available for you on our website at premiersmi.com or on our YouTube channel 24/7, so they're out there. But they speak to carrier explanations, such as we've gone through today, also different marketing techniques to help put you in front of people at this particular point in time, which is really important because we want to identify what's necessary, how we can use a tool here that also helps you cross-sell. And some of the webinars that speak to this experience will come to you as follow-up to today's presentation as well. We also offer a system that allows you to enroll Medicare Advantage and prescription drug folks through a singular system, where that sign-on also puts you into our quote engine for ancillary and med subs as well. It also has a CRM system in there for you to use as well, and it's very popular. So it gives you some different options. We have different explanations on how to use that system. As Kevin mentioned, the carriers offer different incentives and trips. We want to make certain that you're aware of the full compensation package, so that is there on our website in a singular place so you can access it. This is showing a Premier Producers Convention. We've changed some of the follow-up to that simply because of the real world, and the trips this last year just didn't happen. So this gives you details on how to qualify for additional dollars through Premier based on production in certain areas. Medicare Advantage and PDP programs don't help with this. The med subs and the ancillary products sure do. So it's a great way to earn extra dollars by working with our organization. And we will help put you in front of folks. We do offer a contact list that is custom ordered for you based on your contracting situation with it. The prices will vary. Sometimes it's free. Sometimes we ask for some help. But we also help you market in the community. And while many people are working face-to-face in some of the retail settings, the same concepts can be carried over into a virtual world, and that enables you to work with other senior centers of influence in your community, including faith-based organizations and different providers that are delivering upon the care on the products that we're offering. Those are available, different webinars on those topics, so they're there for you. And in this particular time of the year, particularly if you've worked with a carrier throughout the year, particularly on a Medicare Advantage basis, they sometimes have leads to share with you as well. We do also offer internet lead programs and direct mail support. The direct mail is a deeply discounted program that based on production that helps you do a regular snail mail campaign. It's still proven, it still works. And this is a great way where you can do it consistently. So you're not exercising once and feeling the pain and seeing no benefit. You do it consistently, you're going to have great success with it. We use preferred lead vendors because we vet the information that's available for the different mailings to make certain that you stay compliant. And there is also different programs that we have available where the direct mail is also not a full campaign where you're designating an area, the mail goes out, you wait for it to come back in. You have the CRM systems with the different lead vendors that help you with that. But we also offer just the responses. Sometimes that helps folks work with their budget, and it's obviously a quicker turnaround. If you are sitting on a response, obviously they may not be as hot in certain circumstances, but we want to make certain, particularly at this time period, where we've got a couple of different vendors for you to use, that can make a difference. We do also offer Facebook leads, a program for that for both Final Expanse and Medicare, and it's all part of our desire to work with you and earn your business. As Uncle Sam says, we're looking for a mutually beneficial relationship, and I think the programs that we offer in support of the great carriers like Aetna Senior Supplemental, it makes a difference. It's been a decision on your part at this time of the year, how fast can I get this up and rolling? How can I make certain that I am offering everything I need to cover my prospects and clients and garnering all of the commission dollars that are possible for you? And it's a question then of, yep, this is what I want to do. I'm going to take care of it and move forward. So that said, you can reach any of us here at Premier at 1-800-365-8208. You will be receiving a follow-up to today's presentation, including a link to the recording and some additional information that comes with it, and you can respond to it, and we'll take care of you, obviously. And you can learn more about us, too, through our website at premiersmi.com. We'll have folks reaching out to make certain that you have the programs that can make a difference for you even now. Okay, it's Veterans Day. It's 11/11/2020. Kind of a weird quasi-paradigm, but it's a circumstance of making certain that we're doing everything we can to take care of our prospects and clients, but also garner the commissions that come with it and steady some of that income stream that we see at this time of year. So all that said and done, it looks like no additional questions have come in. We want to thank you for the time that you spent with us today. For those of you that are contracted with us, we thank you for your business. It's greatly appreciated, and we think that we can be a good partner moving forward if you have a relationship with us now or not. And we look forward to the discussion that spurs on that action. So all that said and done, until we have that chat and we're able to visit one way or another, we wish you in this time period that seems so hectic, good selling. That said and done, thanks so much, and we'll talk to you soon. Thank you, Kevin. Really appreciate your help.